All right.
Okay, welcome. Just started, so we'll see as people come in.
Yeah.
Welcome everybody. We're just letting a few more people enter. It'll take a few moments. Do you want to wait a few minutes, Chris, or do you want to get started, or wait a few
I
moments?
Let's just take another minute, maybe. We
Sure.
don't want to wait for too long.
Okay.
All right. Maybe we should get started, not keep
Sure.
people waiting for too long.
Okay.
And
Well, as we bring more people, as more people come in, we'll just add them along. But I
yeah.
want to welcome everybody today to SCORE's Chris Carlsson webinar about the PPP program. And we always talk about Chris as being a PPP enthusiast. And the good thing about Chris, I think, is that he's actually not only knowledgeable about this, but actually has used this for himself and his own company. So he's a wealth of information. And this is presented by SCORE Monmouth. And we are an organization, we're funded by the SBA, but our job here is to help people to start or grow their business. And one of the ways that we help people is in these webinars. So we're going to be hearing from Chris today. And I would ask that instead of using the chat button in the bottom, if you could put it in the Q&A, and along the way, we'll be answering your questions. It just helps everything to flow better. And with that, I'd like to introduce Chris Carlsson, who is our former chair of SCORE. And take it away, Chris.
Well, thanks, Bill. And welcome everybody to this second installation of the new PPP2 webinar series here. And we're not going to be that long today, to the delight of everybody, and primarily because of that there hasn't been that many changes occurring since the last time. What we thought would happen the last time actually has happened. It is what we thought. So I'm going to go a little bit more on my experience here, what we see, what we hear, and kind of go in and do a refresher and talk a little bit about some aspects of it. Because I spent most of the time today actually doing two of these applications. And well, in one of the cases, I spent 2 days doing it with some frustrations, and we can expand a little bit into that. So the second bite, also known as PPP2, is now open, as probably everybody knows. And what I heard this morning or last night is that there are now about 5 billion bytes out of this 284 billion PPP apple that was served up again. So the rush is not as big as it was the last time, but it's there. And I think everybody's now much more aware of how things work. And in this case, it is expanded a little bit for expenses that you can use it for. Otherwise, it's very similar to the first. Same thing, you got to spend 60% on the payroll to be forgiven. It is forgiven, the same as the first. It is a forgiven program. So if you spend it on the right things over 24 weeks, it will be forgiven. And that should be working, which it isn't. There's something going on here. Let's see here. There we go. So let's talk a little bit about how do we figure out what our max PPP loan is. It is the same as the first. It is 2.5 times the average payroll for a period of time. Then payroll in this case is defined as the gross payroll, actual compensation of payroll, which is the typical, the payroll check, bonus, vacation pay, car allowance, everything that's cash that's in that goes over payroll. You add the local and state payroll taxes to that, which aren't all that much. And then you also have retirement benefits, the company contributions to the retirement benefits, and the company contributions to the health insurance, dental vision, and the group life was added to that. So if you have a big bill for group life, then that could be added to that number that you had for 2019. So for what period of time are we looking at that you can do this? It is, you can pick the same period as you did the last time, and for most people, you probably will end up doing that. And that's 2019, just like for the first bite at the apple. Or you can use 2020, or you can use any 12-month period in between there, up to when you do the application. Now, doing the full year is a little bit easier. It's easier to get reports. It's easier to kind of comprehend what you're talking about. And most payroll company has it set up that they hit the button and they can go. Then, if you are in this industry code starting with a 72, and that 72, most cases for you, you can go back and look at your tax returns. There is a spot for that with your industry code on that, so you can see what you did. If you didn't put it on your tax return, that what industry code you have, then you're going to have to prove that you're in a hotel business or restaurant business by serving up licenses and those kind of things. So now it gets a little bit more complicated, but to get 3.5 times instead of 2.5 times, it would certainly be worth it. Now, if you are a new entity, then you can do that a little bit differently. If you, for example, started January 15 this year, it would be 4/2/15, then you can use that average from the start up until the application time or 12-month period over that. And then there are some other things when you do the qualifications aspect of this that you have to look at. So I do want to remind everybody again about the forgiveness aspects of both of these. It's easy to forget, and there are people talking about, it's going to be automatic and those kind of things. If you're less than a certain amount, maybe it is, maybe it isn't. I do want you to be aware that as it stands right now, you have to apply for forgiveness, and there is no real deadline, but what there is that SBA will start billing you 10 months after the end of the covered period. That's a long time out in most cases. If you got the loan on 5/1, then you have 24 weeks, and that takes us into October, and you add 10 months to that, takes us into August. This is why it actually is easily forgettable. So what happens here is that you don't do the forgiveness application, You forget, you get a bill from the SBA and you say, I don't have to pay this. This is forgiven. And you don't do it. So what happens? If you don't pay the SBA, you get in default. You don't want to be in default with the SBA. That is a really bad thing to do. It affects all banking you do. You don't want to be there. And in addition to that, you do want to get it off your books. The accounting wise, if you're really little operation and those kind of things, doesn't matter that much, but you should know anyway. And if you're a little bit bigger, this is sitting on your books as a loan. You want to get that off. That gets converted to equity. So it's really good for you. Banks like that. If you want other type of borrowing, if you want to go and get a credit line or renew your credit line, you'd rather have this as equity than as a loan on the books. It helps your numbers. It helps the bank covenants, how they look at it. So talk to your bookkeeper or CPA, how you want to do that. And you know what, too? There's a reason I have Uncle Sam up there. And that is because both Uncle Sam and the lenders want this to come off the books. They don't want to worry about it. They don't want to collect on it. They don't want to have the processes for it. And it's good for you. And now there's no tax issues involved, so there's no reason not to go and do it. And most banks are up and running. What I've seen is that I've seen a few that are not, but most banks that I've seen are now again up and running because they're getting a handle on the new regulations. So there are three forms. Forms really don't exist. It's really a portal and it's selection of which one you get into. And it makes a huge difference in how you have to prepare to do the forgiveness. You have the regular form, which is the big one where you have to go through full-time equivalents, compare. If you have anybody that you reduced by 25% and all those kind of things, and it's a big form. I think it's 35 pages in all. So there's a lot of stuff and a lot of calculations. Then you have the easy form. If you qualify for that, then it goes to only 11 pages or something like that. Still calculations to do, but easy, much, much easier than the big form. Then you have the 150K and below one-page form, but basically you don't submit anything. You input it and you certify that you have done what you said that you were going to do and basically be done. Then, just touching on this to know that you don't have to worry about the EIDL grant going to reduce the forgiveness amount. That was revoked, doesn't affect anything. For small borrowers of PPP, that's a big deal because that grant was in many cases almost as big as the PPP was. And now that issue is off the plate. Oh, back to the second bite here of the 300 billion PPP apple. So time frame, deadline for applying is 3/31. So it's 2.5 months off. So then the question is, when should we apply? And I think most cases, it's going to be when the bank is ready to actually do it. And that's what I did for a couple of companies yesterday and today. And most are ready now. I hear and I see, and that includes fintechs like Cabbage, etc. Then it's also in respect to the certification aspect of that, where you have to certify that this money is needed for you to sustain your operation. And what I have seen is that many CPAs are very cautious on this issue. And we're going to get into it a little bit later on how I'm looking at doing it and how I did it. And some people, if you're in a situation where you say, well, yeah, I had a dip in the second quarter and my industry came back roaring and I did better. So then the question is, okay, so do you really need it? Can you certify that that's the necessity? And that depends on how you look at the world and what could happen, and we'll get into that. And then the other last one there, well, not the last, the second to the last is concerns of funds running out. If you're concerned that the funds run out, get ahead of this, get in early on. Banks right now don't think so, but I also think that in all this, banks really haven't known a whole lot. So it's how you feel about it. If you think that you want to be in it, that you need this money, you want to be upfront and not run into the delay like we did the last time. So then go ahead and do it if your bank is up and running. And get prepared. There are things that you need to have to do this, like payroll reports, and most payroll companies have their PPP reports. You're going to need the 941s, the payroll taxes, and you're going to need some reporting on your health insurance and 401k. And you're going to need proof that you had a revenue reduction. So you need to get that together. I can tell you that's very frustrating if you don't. So the second bite, just a refresher here, requirements. What are the requirements? You have to have equal to or less than 300 employees. You have had to have a reduction in gross receipts, and we get into what that means, that is equal to more than 25% in any quarter in 2020 compared to, I didn't say that, the same quarter in 2019. You also have to have spent all the PPP1 money before you get the PPP2 money on eligible expenses. Now, for everybody I know, that's not a problem because it's been since April, May, June, maybe for most people, and they have spent the money. This is not about if you said, I'm going to take my PPP money, I got this 80,000, 150,000, 300,000, whatever it was, and put it in a separate bank account, and then you have money left in that bank account. That is not what this is about. This is about, did you spend these payroll dollars that are the eligible expenses? Did you spend that money on rent? Did you spend it on utilities? If that adds up to your PPP money, you spent the money. It's not about which bank account, which money. They weren't earmarked for specific things. It's whether you spent the dollars. Also need to self-pass the necessity test, and you have to be in business on or before 2/15/20. So let's talk about that revenue reduction parameter requirement that SBA has on the second bite loan to qualify. So you have to have a reduction in any quarter, one quarter in 2020 compared to the same quarter last year. In 2019. And they are phrasing it as gross receipts. So what does that mean? It kind of means what you think it means. And it means that it's either cash or accrual accounting. If you do ordinarily accrual accounting, this should be based on your accrual accounting for the 2 quarters that you're comparing. Has to be consistent. You can't do cash for 19, accrual for 20, or vice versa. Got to be the same way. And if you do all your accounting every month on an accrual basis, that's how you do it. However you do it ordinarily, that's how you do it. And it is about how you do your books. Now, there are some companies, primarily smaller ones, who don't really do their books till the end of the year. And kind of go on a cash basis as you go along. And then there are the smaller people who just have a shoebox sort of thing, or maybe a computerized shoebox sort of thing that they go through at the end of the year and do this stuff. If that's what you have, then it really is what I read, and I think actually from SBA, is that then you're really going back to the cash receipts on your bank statements. And what you would have to do is go through your bank statement for that quarter and designate which are actually cash receipts for my business. If you mix the personal and business, but even if you don't, because you're going to have receipts on your bank statement that aren't eligible for, that aren't really revenues. If you got a tax return refund, that's not revenues, not cash receipts from this perspective. The PPP money you got is not. The EIDL money you got is not. If you took money on a credit line, it's not cash receipts. So you have to go through and figure that out. For those of you who are smaller and do like QuickBooks Online that pulls from your bank account, you can do it through that facility. One other aspect of this is, if you're close, if you go through and you look at your quarters and you are at 24% in a quarter, I would look very closely and look at the 2020 cash receipts or revenues and see what is there. Was there something there that I actually should have refunded? Do I have bad debt? That is legitimate to deduct from those revenues. So if you in 2020, you have invoiced $8,000 to some company you did business with, and they were hit by COVID, and then they haven't paid yet, and they're probably not going to pay, and that was on May 30, I would go back to May 30 and write that off as of May 30 and reduce that cash receipt. Talk to your accountant, bookkeepers, because in that, I'm not saying it here, but it is in that is that you can deduct out the refunds, bad debt returns are coming out of those numbers. So don't give up if you see a 24 or 23% number. Really go in and look to see, what did I have here? Did I have a big refund on July 4th? Not 4th, 5th, 6th. And that really belonged to revenues I'm accounting for in the second quarter 2020. Go and deduct that out. You can do that. So let's look at the necessity test a little bit. As I said, CPAs tend to be conservative of this. Right? Do you really need this money? Well, it's not what the CPA says, really. This is only partially a numbers game, but it's a numbers game of what you believe, I think. Because what does necessity mean? They're talking about what is necessary to sustain ongoing operations, which is what you have to pledge under penalty of perjury. What does that mean? Okay, how do I know what's going to happen? So would you go out of business or substantially have a reduction in operation without this PPP money? Under what circumstances? I don't know. And if you have a problem, can you get out of liquidity to cover everything and be functioning in an ordinary type fashion without risking the operation. One interpretation of necessary is that it's appropriate and helpful, which in my mind is a lower bar. So here is how I've looked at it, and I think that's right. And you look into this year, you do a forecast, however simple, however complex you do this stuff. If you haven't done it, talk to your bookkeeper. It's not that hard. Take your 2020 or 2019 numbers, move them up and down, and see what happens. So, and I did this. I went back in a couple of operations and said, okay, so what happens in 2021 to our forecast? What happens to my cash position if our revenues go down by 10 or 20%? Well, in a couple of those, the picture wasn't that pretty. And then the question is, do I have the liquidity to cover it? No. If I take a 20% hit in this company, I don't have the liquidity to cover it. And if I do after what happened in 20, and if 2021 is not good, where will I be? Will I cap out my credit line? Can I put more money in myself? Well, no, not really if I want to live. So you have to look at those kind of things. Do that simple forecast. And if you believe that you need this money to sustain yourself, then you believe that. The bar isn't looking at it 2020 and say, oh, I guess I wouldn't have needed it afterwards. That's not the bar. It's what you believe now. And I think that you have to look at that risk two ways. Most CPAs that I've talked to and heard about this are kind of taking a risk-averse position on the legal aspect on the necessity test. I say that's only half the equation. The other equation is, what's my risk of not taking the money? And I think there's a substantial risk in most industries right now. We don't know what's going to happen. How long is it going to take before the vaccine is going to come in and make us behave normally? Where is our tipping point in the economy from a demand perspective in our industry? We've been going now. There has been a lot of support. The Fed has been pumping money into the economy. What happens here if now with a Democratic administration that the Senate won't let that happen now? What happens to the economy? We don't know. We have to think about that. This money is there for you to survive. That's how I would look at it. At the same time, as I said the last time, don't do stupid. If you say, I needed this money, and then you go turn around and buy $120,000 boat or car and those kind of things, you might have a hard time justifying what you did. If you have it there, you use it for business, it's a whole different ballgame. This is something that you have to kind of decide yourself how this is going to work for you. I would say don't be too conservative. Do your forecast, bring your revenues down by 10 or 20% and see what happens. So now in this second go round, everybody has become more sophisticated. They know what they're talking about. That includes SBA and the banks, I have discovered. So how do you define the payroll? How do you actually calculate the payroll that is the basis for this PPP loan? Well, if you're an S or a C Corp, then it is the actual payroll based on what we said before. If you're a sole proprietor, then it's the same as it was the first time. It's the net profits on Schedule C that you're talking about. The same thing as in the first one. And if you are electing to use 2019 as a sole proprietor for a second PPP loan, then most banks will make it very easy for you. You use what you used before, and you just kind of resubmit it, or they accept it and say, yes, I have the information already. You don't have to do anything. Just tell me that you're using the same. If you want to use 2020, you haven't done your taxes yet. You're going to have to fill out your Schedule C and submit that just like you did the first time. No difference in that. If you're sole proprietor with employees, it's really a mix of payroll and your net profit in the Schedule C with the same restrictions. And I didn't mention that when we talked about the payroll first, because same restriction of payroll. You cannot apply payroll over $100,000 for a person. So if you pay yourself $120,000, you only get to count $100,000. If you have a sales manager who's paid, or a high paid commission salesperson that is over $100,000, you only use the first $100,000 for these purposes. In partnership without employees, that's then the share of the net profit added up, and that's the basis. If you have employees in a partnership, it's the combination, just like we talked about before, share net profits plus payroll. And if you're an LLC, it depends on where you fall out here. If you're a single member LLC, it kind of works the same thing as a sole proprietor. If you are several and you have employees, then it's a mix of a K1 and payroll. Then let's talk about documentation, because I've just gone through this. And in one case, it was a breeze. We elected to go with a 2019 payroll information, do the same thing. And this bank said, yes, if you are using the same bank, if you used us the last time, and you are using 2019 payroll information, we got the stuff. If you're using the same thing, just click this button, click this button, click this button, done. That was really easy. Only thing I had to do in that case was to supply the information to verify that there was a quarter with a 25% reduction of revenues. That I had to supply. So in the other case, the bank said, no, we want new information, we want new payroll report, etc. And then that actually prompted us to really look at it, and we found it easier, and it didn't make a difference what we wanted to do. We used the 2020 because it was easier to get the payroll reports again from the payroll company, etc. And many lenders have become more in tune with what's going on, and they're kind of being put under higher scrutiny for the documentation. And it's less Wild West than it was the beginning of the first one. So some of them are looking much more closer. They are much more in tune with what they need to do. So what I also found was that I had to get into the application to really find out what they wanted. Because in the beginning they said, and here, remember, SBA says these are the minimum requirements. Banks could put any requirement they want on it, and some banks do. So in this case, the bank said, this is the information we need. We got that information. Getting into the application, turns out that they actually wanted more. So had to get out, go and get the information. And then it turns out that in this case, they weren't quite up and running. So we could not go past page number 3 in their application because it just froze. So every time we went in and out, we had to start over from the beginning. Now that became easier every time because the information that we had to supply, we now knew it all. And really what it was is that one thing that you should have up front is go and get your PPP1 loan application number. PPP1 loan number. It is on your PPP1 loan documents. And so you need to go there. It's possible that you can get with the bank and get the number that you had, but probably not. It's hard to get them online. They are now swamped. Their systems are swamped. And that's what I found too. It took forever to certain points to get in and out. But you need that number and you need the amount of the first PPP. So have that available. And also the information we talked about that is going to substantiate your 25% reduction. Have that available. And what actually SBA says is that you need to sign it. You need to sign the first page. If you have financial statements for the second quarter, for example, April, May, June for 20, and the revenues there clearly delineated that this is revenues. You have to do that. It has to be clear of what you're sending, that this is the line I'm looking at. These are the gross receipts or the revenues that I have. And one for 2019, one for 2020. And that has to be uploaded. Everything here is uploaded. Most of them want PDFs. So you can do tax return. If you're doing full year, but at this point, nobody really has 2020 tax returns yet. So you're really doing financial statements or bank statements. And as we said, if you do bank statement, you have to go and delineate which lines you're talking about. And then add those up. In a smaller one that I've seen on a fintech, they didn't ask. No, that's not true. They did ask to get that information uploaded. Yes, that's one thing no, they didn't. They just asked me for it. They didn't have to get it uploaded. But for the bigger loans, yes, had to upload the information, had to upload all the payroll information. And what that is depends a little bit, as I said, what kind of entity you are. But yes, it's the payroll information. Easiest to do is get your payroll service provider to get your PPP report. PPP2 report, they can do, they know what you're talking about. In one case, we couldn't get it. We had to do the calculations ourselves. So then we actually had to show the applications, show the calculations, show the payroll report, show the 941s, the quarterly payroll tax returns, and show the calculation of how we got to the average monthly payroll, and then multiply by 2.5. So when you go in and out, that could happen. It could be problems. Don't get frustrated. I've done that for you. I can tell you that get things up front, be prepared that it could be messy. If you have to start over, once you do it, keep track of your information. If you put down your quarterly revenues into 2 quarters year over year, write them somewhere. So you don't just put them in, because if you get kicked out, you don't want to go back now and try to figure it again. I learned that the hard way. So if you didn't do the first PPP, you can't do the second one, but you can still do the first. And that's very similar to the second. And what I see is that the banks actually have it on their portal. You go in and they're asking you, do you do a first draw or second draw? If you didn't do a first, you can do a first now. It's not too late. You have to the 31st. There is also the shuttered venue grant that I want to touch about. And you can see here what entities that include. The live venue operators, the theater producers, live performing arts. That is a program that is separate from the PPP. And here, for some reason, you have to be in operation as of February 29. When you get this, there is a link to a YouTube video for this that I think is very good, explains what it is. And there is a link to, down at the bottom is also a link to where they outline what this is for and how you do it. And I would say you're investing about half an hour of your time. It's worth it. Interesting there is that you can do a shuttered venue grant if you got your first PPP loan before December 27. If you got it after, then you have to look to see if this time around, if you want to do the shuttered venue grant or the PPP. For many people, this will be more money than the PPP. And it's outlined one of these here. You can see it. There is a graduating scale for when they prioritize funding you and those kind of things. But you have it here. When we send it out in the next day or so, you can click on these links and it's going to very quickly tell you what you need to know. And that was the extent of my presentation today. Nice and quick. Any questions? Doesn't look that way. Well, that's good. And it doesn't surprise me that much because there is so much information that has been out there about this. And what I can say is get your information together, then go and do it. It's
Chris,
not that hard. Yeah.
Chris, there was a question from Jeffrey Friedman who asked, I received my first PPP loan through my business bank. They have not sent me any info yet to apply for the second PPP. What do I say to them since they said to wait for an email from them?
What I would do, there's nothing you can say. You can't force them to do it. And what it is, it's a question of them getting set up. Most banks are going to do that because they make money, especially the second one. Tell you here, in both of these cases, what I did in the last 2 days, we're talking quite a bit of money. And the bank does no work. They do the IT work, then it's done. They don't touch it. And it goes and it gets reviewed by them and by SBA. And why SBA wants the old number from the first one is really that they're going to compare. They want to catch the people that they didn't catch the first time, that did fake companies and all that stuff. And so they want to look at, yeah, this is the same EIN number on the second one as the first one, same address, same owner, we're okay type thing, so that they don't get an application from Joe Schmo for a company that belongs to Jim Smith type thing. All those kind of things. So on that, for the bank, I would go to the portal and see what the portal says. Many banks have said that we are going to participate and you will know as soon as we are. My guess is that they are on the verge of getting set up. And they may be that they set it up and it isn't quite working, that they want it to work, because it's complicated. It's really complicated stuff. So I would wait a few more days before I would get real antsy and go somewhere else, because it is so much easier to do it with the same bank. And I would be surprised if they don't do it again, because they make, on smaller loans, they make 5% commission. If they do $1 billion, just do the math. They make a lot of money.
Chris, we have another question from Paul, who asked, excellent presentation. I think you said we'll get the slides. Can you confirm? And yes, you'll be getting a YouTube of this entire presentation. Will be sent to everybody who registered in the next few days. And Chris is going to have ongoing presentations here, because this is a constantly changing world that we're in. And Chris is going to be able to give you whatever the latest are. So every single time you hear Chris, it's going to be the latest different information along the way. But yes, you'll be getting a YouTube after this.
Yeah.
And then we have somebody else, Chris, who asked, I have an LLC. Are some people switching from unemployment insurance to PPP?
Well, unemployment insurance is a disconnected issue from this, has no bearing on the PPP at all. It's purely based on the payroll cost that you had in the year 12-month period and the reduction in revenues in a quarter compared to the same quarter the previous year. If you're an LLC and you took a dump in the business and you got unemployment, separate issue, has nothing to do with it. That's not revenues for you. When you talk about revenues, it's revenues in the business. If you're on a cash basis, it's cash payments for business sales that you did and services that you did, etc. Unemployment check is not a revenue for you.
That almost seems to be it for questions. But for those of you who aren't already familiar with SCORE, SCORE is we're funded by the SBA, which means that all of our mentors give free mentoring. It's for the life of your business. And there's a whole bunch of different areas that you might have. You might need some legal, you might need some marketing, you might need help in many different places. And 2020 has certainly been a year of changes and challenges. One of the things that here at SCORE, we had over 200% increase in people needing our services. And because of that, we added 11 new mentors to be able to help more people. We've added a diversity and inclusion lead who was a former chapter chair at another one. And we recently were awarded the New Jersey chapter of the year. What I'm trying to say about this is we are here to help you. It's always free, always forever free. And we have a bunch of different expertise that can help you. And if you go to monmouth.score.org, you can choose to find a mentor. In that first meeting, if that mentor doesn't have that skill set for you, we can find somebody that's going to meet your needs and bring in a co-mentor. We did have one more question, Chris. I just want to pop in. It said, I started my business the fourth quarter of 2019 with a consistent revenue for that quarter. and the 1st of 2020. Is my business eligible?
Yes, it is.
Isn't it February 2020 that was the date,
Yeah,
the metric?
February 15 is the deadline. You have to have started your business on or before February 15. And if you had revenues in 2019 in the fourth quarter, and you could compare that 2019 fourth quarter to the fourth quarter 20, if 20 is down by 25%, you're eligible. That's how it works. And for new businesses, there are some other things there too. And I'm going to make a note, and because SBA has now kind of done their homework and outlined how you do these things, which they didn't do before. And I have that. I'm going to send that out when I send when we send the slides out. It's short. It shows how you can do it.
Okay, Chris, we have another question from Thomas. And Thomas asks, as of this moment, will they withhold the $10,000 EIDL grant until the government finalizes this second round? Or should they forgive the full PPP now as of this moment?
Specifically in this new Economic Aid Act that was passed, EIDL grant does not. Good thing for smaller PPP recipients, it's not deducted out from your forgiveness. You don't have to worry about that. There's nothing to pay back from that grant.
Okay, Chris, we have another question from Gladys. And Gladys says, hi, Gladys here. My businesses are existing, but not yet operational, expecting to become operational in the next month. However, I do have expenses. Am I eligible for the PPP? And Gladys continues, it has been existing before 2020, but not yet generating income, but have incurred expenses. Would I be eligible for the PPP?
No, I don't see that in any of the time frames that you can compare, which is quite a few when you're a new business. The one thing that you have to do is you have to have a 25% revenue reduction. And if you don't have that, for example, if you started in January 2015, I think you could take a quarter in 2020 and compare to first quarter in 2020 and compare those two quarters, but you have to have something to compare and have a reduction, 25% reduction in. If you don't, no, I don't see it. I don't think so, no.
Okay. I think that might be it for questions, at least of right now while it's on your mind, but you can still keep asking questions as they come up. You'll be getting like Chris was saying, you're going to be getting a follow-up email afterwards. It's going to have this YouTube presentation on it. When you get that email, if you do have questions, you can either reply back to that, or again, you could go to the Monmouth Score website, monmouth.score.org, and right there you can find and request a mentor. And again, everything that the mentors do is always confidential. So you have somebody on your side who our goal is for you to be successful. And boy, oh boy, 2020 has been a tough year for many businesses, but we are here to help.
And as you think about this and as you get the presentation, if your question, just email us and we either answer you directly or we consolidate the questions and answer you in bulk, but we will very quickly answer your questions when you email them in.
Okay. Well, with that being the case, I would like to, again, thank you for attending today's webinar. Chris is a passionate PPP expert, and not only is Chris one of our former chairs, he has a wealth of knowledge from actually doing this. So what we like is that Chris is able to give you the actual, this is how you do it, and this is what works and what doesn't, rather than being a bunch of documents that you have to go through. So the next webinar that Chris has just keep looking at, you can either look at our Facebook site, and please register in advance. You'll get the link to it. And our webinars run about 1 hour in length. We have many different topics, but Chris is having an ongoing series here. So as things change, you'll be able to get the newest and most updated information. And there's a lot to learn, but there's also a lot of money that is being held aside for you. And you really should take advantage of that to help your business survive and potentially thrive. So I want to thank you all for coming today. Chris, do you have any other parting comments?
No, I think just go at it. I don't see any real reasons not to go and try to do this. The banks kind of have their stuff together on it. It's especially smaller ones on the fintechs. I did one. I'm telling you, I used 2019 information, and it was 4 minutes, maybe. Amazingly easy.
Okay. Well, with that, I wanted to thank everybody for attending today. Please watch for upcoming webinars that will be coming out, and Chris will be updating it continually. This is great information. The email that you get will have that YouTube presentation. Everything we do is for free. So if you have another friend, colleague, or business owner that could get this valuable information or benefit them, feel free to share it. Everything that we have, we give out freely. And thank you for attending today, and we look forward to seeing you the next time. Again, if you have any information, go to monmouth.score.org. If you want to get a free mentor, we are available for you. We've expanded our mentors to help more people, and we are here to help. So thank you, everybody, for attending today, and we look forward to seeing you the next time.
Thanks, everybody, and good luck.
Thank you. Bye-bye.